What's up, guys? Welcome back to the show. Today, I have on my very first guest, Mr. LeClair, of course, Bitcoiner extraordinaire and market analyst for many companies, BTC Inc. included. Dylan, welcome to the show.
Thanks, Joe. It's great to come and chat, man. I'm excited to be your first guest.
For sure, absolutely, yeah. Couldn't have asked for a better one. Obviously, you are really the foremost authority when it comes to what's going on in Bitcoin, particularly through a wider markets lens. So I guess just talk to us a little bit about what you've been seeing. Of course, we had the ETF launch that really kicked off the year. Bitcoin has been in a crazy rally. So talk to us a little bit about the market structure and what you've been seeing.
Yeah, the ETFs were hotly debated coming in, but I think people were far too concerned about what happened in the first week to even the first month, even though it's been probably the best ETF launch ever. Broadly, like even one or individuals, like all the aggregate inflow, despite the massive drainage of Grayscale, which was just dragging Bitcoin down for years on end after the blowing up spectacularly the whole carry trade that fueled the bull run of 2020. So the fact that BlackRock is 1 month into this just indiscriminate 500 million, hundreds of millions of dollars, is just for me. It's obvious that this is the start of a passive spot bid. The market structure has changed. Supply constraints are still very real, and it's going to take a massive price appreciation for most of the core hodler base to even part with some of their coins. Like it started a bit, but it's barely started. Really not at all. A tick off its all time highs of kind of hodl strength across a variety of metrics, and that is back down to, like, let's say 98th percentile. So it's still, Bitcoin is extremely tightly held, and these are buy flows in the spot side, not derivatives, not leverage or fraud or Ponzi's, but cold hard cash coming from fixed income and
And I
equity
think that's the key.
markets.
I think that's the key delineation too between this cycle and the last time we were at these prices, right? Like last cycle was driven totally by the bucket shops, totally by the speculators, and this time around it's been a little bit slower up to the ETFs, but now it seems like people are really buying and holding Bitcoin as opposed to trading it for just pure price appreciation.
Yeah, that's obviously happened beforehand. It was just a different base. That the previous base is still passively accumulating, but the size of these purchases is, like, there are people with the wealth of Michael Saylor, just, and obviously these wealthy individuals may be buying spot Bitcoin themselves, but with their entities, with their hedge funds, with their endowment funds, with the, both the collective ones, like pensions, which I don't think are aping into Bitcoin right now, but more so the network of BlackRock financial advisors that has the biggest network effect, in terms of, like, financial markets in the world, and the most largest, most liquid capital markets on the planet, which is the U.S. So, of course it was bullish. They're just beginning their passive bid, and Grayscale is drained. So, the last time you saw these flows in Bitcoin terms of this proportion was the summer and fall of 2020. Sailor's first buys and Grayscale's really kicks into overdrive at that point. And after their all-time high break, it just Bitcoin gaps up and goes bonkers. And so we're getting, in dollar terms, like 4.5x. Depending on the day, but of that buy pressure, and in Bitcoin terms, equivalent buying pressure. So it's a matter, for me, it's a matter of, like, when, not if, a new high is made. I don't really particularly care about the timing. The halving is going to be another narrative driver of just flows. Like, this is self-reinforcing. It's not even so much about the supply. It's about the reality that absolute scarcity is enforced programmatically. That just continues to just hammer at these financiers at the top. I mean, a bunch of individuals get it, a bunch of increasingly, macro aware investors get it, but the deep conviction that, everyone inevitably comes down to, if you're intellectually curious on Bitcoin, like that cycle is just starting for a whole bunch of people. So like, yeah, I don't, the people trading the 1 second candle in this market are just, it's like, just sit back, relax. And that's what a lot of people have, I don't think have come to recognize. Like the core hodler base, we're chilling. We've seen this before. We've done the stacking through the bear market, but there's a lot of people that are used to doing that with all sorts of assets. They like these boomers, these investor classes. They buy QQQ ETFs from BlackRock. They buy SPY. They buy these U.S. Treasury bond ETFs, and they don't sell them. They just like maybe rebalance quarterly, but they continue to just compound their wealth. So like the $500 that bought Bitcoin out of BlackRock, like they didn't buy it to sell it in like 3 months. So it just is a change in market structure that I think many Bitcoiners are even going to be surprised with, as well as it's going to melt brains in the fiat system when it does as well, right? And there's like that competitive FOMO. So dude, I'm excited. I think any Bitcoiner should be, but at the same time, it's like up to us to continue to like preach the ethos and the educational component of like how important holding this thing is, how important like actual ownership is, censorship resistance, immutability, like the traits that make Bitcoin, unlike any asset on the planet that we've ever seen, this liquid or this decentralized or this secure as an ownership system, as an ownership network. Like we have to, that torch needs to like continue to be passed. We want to get UTXOs into as many people's hands as possible by the constraints of the Bitcoin network. And so yeah, I like that the ETFs are great, and they're gonna absolutely pump this thing. And they're not pumping it because they're interested in me or you. They're pumping it because they're interested in themselves, and they have self-interest, and they realize they want to accumulate it. But it's up to us. It's up to the people that I would tell the common man, you should learn to acquire Bitcoin and hold it yourself instead of buy the ETFs. But there's a lot of money in those vehicles, those avenues.
For sure. At the end of the day, I mean, you're right on the money. I wouldn't advise anybody to buy these ETFs. From a price appreciation standpoint, it's huge. If you have money locked up in a retirement account, in a tax-deferred savings account, buying these vehicles is a great way to expose yourself to the price. But like you said, you're not using Bitcoin the way it was meant to be used. And in the short term, Bitcoin is a hedge against, monetary debasement. It's a hedge against these, the ebb and flow of these cycles. You can preserve your purchasing power, but like in the long term, as the U.S. fiscal situation spirals out of control, owning Bitcoin yourself is a hedge against what they're going to do to you, which is seize your assets. If you there's a 0% chance that if Executive Order 6102 comes around again, we get an executive order where there's civil asset forfeiture. I highly doubt that BlackRock is going to tell the U.S. government to go screw itself when it's asking for all of the Bitcoin on behalf of its customers. I highly doubt Coinbase is going to not comply with the U.S. government, right? But there is this element of passive flows, and I want to dig into that really quickly here. I have a window on my terminal. This is in dollars. This is the total spot ETF assets under management in the top pane, and then the flows in the bottom pane here. What are some of the implications of this passive bid for Bitcoin? Because this is just the flows. This is in millions of dollars, and you said it correctly. IBIT, which is BlackRock's product, and FBTC, which is Fidelity's product. Those are the two, number 2 and number 3, respectively, largest ETF launches in the first month by assets under management of all time, second only to gold's ETFs. Gold has been the beneficiary of a passive bid for the last 2 decades. And here is a chart that I made where I lined up the launch of gold's first ETF to the launch of Bitcoin's first ETF. And I or suite of spot ETFs. I line them up here. Do you think because of Bitcoin's passive bid with these ETF products now in the market, you know, Bitcoin's in store for something like this?
Yeah, probably. I mean, taking two time series and different y axes is like, I mean, its number go up for sure. And I often do the same. But yeah, I mean, it's the dichotomy between Bitcoin and gold this past month in terms of flows, by the magnitude of billions in positive and negative directions. With Bitcoin, being the one in the green is massive. It's a narrative violation to all these gold is, the gold theses of like it's a hedge against whatever it failed to hedge against when they seized it and devalued it twice in the 20th century is funny. And so, yeah, I mean, it's like even if you want to own an ETF, the Bitcoin ones, which you still, it's Bitcoin in a wrapper, are publicly posting addresses and like it's a much more of a transparent system. Ultimately, proof of liability is an important part, but like that's quite literally the job of these massive institutions like BlackRock and Fidelity. Is like, yeah, if you are like paranoid about like the government kind of seizing your assets, it would be no different than like holding a stock. Which, if you don't want to hold stocks in a brokerage account, all the power to you, right? But like, I'm not too at this point. I don't think a 6102 is overwhelmingly likely, but it's something that everyone should like have in their mental model. Like run some probability analysis, however underweight or however likely or not likely you think that is, but yeah, I mean, Bitcoin is digital gold is like the easy pitch. It's like, yeah, just a digital rock, and it does nothing. It's like, yeah, the bull case is only 50, is only 10 trillion, is only like 500K a coin. I mean, that's a layup. That was always like the most bearish case I could come up with. So these guys that have tens of billions, hundreds of billions, trillions of dollars of fixed income garbage, and I mean, even though we've seen the rate shock in 30 years,
Speaking of
long
fixed income
duration,
garbage,
yeah, I mean, there we go. Uh, but like the rates shock has occurred, right? With fixed income, long duration stuff. Like you went from one and change on the 30 year to three and change, four and change, right? Like that rate shock already happened. They lost that power along with the inflation, but debt to GDP is still 130%. So like you are still expected. I don't know what the swaps are pricing at. The inflation swaps are pricing at like at the moment. But like for me, I would not touch any of that stuff with a you know 30-year pull because it's hot garbage given where the debt is. So I mean, yeah, maybe for a trade, but I think the market still not the market, but like the world has still all these people are still like hopelessly optimistic on the state of the fiscal budget, not just in the U.S. Every sovereign on the planet for the next 10 to 30 years, just with how this stuff is going to compound and how quote unquote like democracy leads to just the Weimarization of of a nation eventually. It's not like say imminently, but like we can clearly see it, and clown world will intensify, and there's just no way in nominal terms you're going to get paid on your debt claims to the U.S. government, but in real terms, like what are you getting at? And so there's still so much money out there that's in this illusion of a world that sovereign like that the G7 nations are solvent. Um, and like Bitcoin is still just irrelevant. It's $1 trillion. So like that's how I'm thinking of this about the ETFs. The ETFs are just like the piping. They're just the piping to finally get to that like massive pool of money. first step.
For sure. One of the first steps indeed. And I also tend to think it's like, you know, our generation, we buy assets, you and I, we care a lot more about what we're buying than most people. Most people will just see number go up and that's the reason they buy Bitcoin. But when it comes to boomer money, like usually they want to know what they're buying. Which is a characteristic that's largely unique to the older generations who have these retirement accounts and can allocate to these ETFs. And I tend to think that however small a section of them will learn about Bitcoin and then want to hold it the way it was meant to be held. So instead of buying these ETFs, maybe they'll buy the ETFs with the money they have available in their 401ks, but anything else, they'll commit to actually owning and custodying Bitcoin themselves. I don't know. Could be the optimist in me, but that's kind of where I tend to think about it. I want to run this question by you. So Dennis Porter yesterday, he tweeted out that Bitcoin miners had begun receiving letters from the Department of Energy forcing them to report sensitive data like the location and the hash rate of every single miner. I don't know if you saw this, but this is pretty disconcerting. By all accounts, it seems, kind of totalitarian. What's happening here? Um, what do you make of all this? And what kind of implications do you think this has for miners and where they'll position themselves?
Yeah, I mean, this was always going to be the case. This is why it's good that 50% of the hash rate leaves China, and good for investors, good for capitalists, and the New York Stock Exchange when they all these all these companies go public, and good for investors and good for opens up capital markets. But like we don't want more than 30-40% of the hash rate in the US, right? Publicly, and anything that can be captured will be captured, and Bitcoin's extremely transparent. So I mean, from a censorship resistant standpoint, I mean, the fact that this is all public, it's a public ledger. The US, you should assume, has backdoors into every centralized exchange tied to your name, like that. You should accept that. It's obviously, Bitcoin is absolutely scarce. They can't infringe upon your property rights, but they can obviously look to try to enforce taxation, and they can try to and so ultimately, I mean, it returns the power dynamic back to the individual over the state, but the state can still try to encroach upon you, if they can. And so, yeah, I mean, the miners. This is why guerrilla black market darknet miners, if you will, aka not reporting every piece of data you have about your business around the clock, is bullish, right? There's just, I mean, the amount of people underestimate the amount of single or double or small ASIC farms that are just using incumbent forms of electricity that otherwise would go untapped, that point to any pool that doesn't KYC them and has the lowest fee. And there's so many out there, and as a result of stuff like this, there may be an increasing amount of global opportunity and not in the States. I mean, plenty of miners will be in the States. They will be KYC. They will be,
Yeah, I just saw
like
earlier today. I don't know if you saw the Ethiopian government is going to start mining its own Bitcoin. This was reported by Cal Casa, who is the CEO for Ethiopia at Hash Labs. But hash rate can
yeah,
go anywhere
I've
globally.
talked to the guys at Hash Labs. They have some interesting stuff going on. Yeah, it's I think that's increasingly going to be the story. There's all this energy out there that's criminally underpriced, and instead of just sending it off to somewhere where it's more in demand, you can bring the demand centers anywhere instead of going to where, instead of building a society where you can where you can and then importing the energy, you can build society at the source of the energy, like where it would previously be valueless. It's pretty novel, and I don't think anyone really understands implications. Like, you can go super far out in the curve and talk about thermodynamics, and like climbing the Kardashev scale, our civilization's ability to harness the world's energy. Like if you can theoretically measure, quantify that, from 0 to 1, where are we and how do we climb it? Because you should think that that improves a human, like, society's living standards. Or you can, think the other side, just go full Uncle Ted and, and think that we should burn it down. But I don't believe that. Um, you know,
For sure. Yeah, no, the two paths you could take as a civilization are, you know, you could dye your hair and call for the destruction of human flourishing, or you could call for accelerating our use of energy and seeing where it takes us. And it is an
yeah,
extremely interesting thing. And I want to ask you about Bitcoin accelerationism because, you know, society, like polite society, used to be relegated to, or developed civilization, I should say, used to be relegated to places where there was energy, and then commerce developed around that, like port cities. Obviously, dotting the East Coast, and dotting the West Coast here in the United States, but also globally too. It really kind of uproots. It's so hard. It's so difficult to articulate because, like you said, nobody really fully understands the implications of these things. So, I'll kind of let's dive into that a little bit more in the little time that we have left here. Talk about Bitcoin accelerationism and what it means to, as a society, climb the Kardashev scale and where Bitcoin fits into all of that.
yeah. I mean, to be honest, it was talking with Smeet. I mean, I'd followed the Smeet, one of the co-founders of Theya, of course. But I followed the AI story narrative, reality over the past, I don't know, 18 months, and what the intellectual thought leaders and builders were saying from this space, and it very much aligned with my worldview, like freedom of information. No, we're going to push the pace of tech development. We're not going to let government regulation, impose upon us or slow us down or, decelerate what we're building because, some bureaucrats or lobbyists say so. We're going to do this. And I love that energy, and I agree with that worldview. And a lot of the intellectual, hypothesizing about where this growth rate in tech will take us all, leads to some crazy realities. And I crazy bullish and optimistic, and also maybe more pessimistic, totalitarian, dystopian, kind of panopticon society, in a world where this goes awry. And I don't think the bull case, the case that effective accelerationists take, is compatible or realistic in a world where Bitcoin doesn't win. I think Bitcoin in this worldview does win massively, because there is no real alternative. Or I think it's the singularity, right? It's like we have this mass waste of a monetary system. The money's priced is broken. The free price of money actually accelerated. Ironically, like it accelerated, or maybe not ironically, it accelerated the build out of this tech, just a massive scale, embedded into the valuations of these software companies and VC and all of this, growth we've been chasing, not like at an industrial scale. Like in the U.S., past how many decades have we been more focused on finance, software, or I guess it's all of Silicon Valley, and bureaucracy rather than industry, right? And then I know this isn't just a U.S. centric story, right? But this free money has basically accelerated the heck out of this development of the tech, and now we're at the point where the AI thesis of like abundance for cheap or free, right, is at pure opposite sides of like the probability distribution, or not the probability distribution, but just a different side of the coin. If you believe that, or not if you believe, but the reality of our monetary system, which requires perpetual price rises to maintain the credit expansion, right? Like this is the Keynesian economic model. We need a perpetual growth in money supply. There can't be a contraction. There cannot be a meaningful contraction, or else the system goes blow. So like you just start running the numbers and you're like, okay, well, what's the debt compounding at? And like few people have ever pondered what's the $34 trillion debt in the US compounding at. No one thinks about that, right? And so like Bitcoin or not Bitcoin, anything with a fixed ruler in this world where AI is like brings like hyperdeflation in the form of technological advancement. Never mind just AI, but just tech in general, automation, like what's here now and what's going to be here in 10 years. Like it's not linear, it's exponential. And that just no one like it breaks brains, right? And so, but that world is incompatible with fiat issued currency, with government currency, with currency lent into existence by commercial and central banks. Just incompatible. You're going to need an exponential amount of currency units to combat the hyper growth that you have. So, like the effective accelerationist thesis, in my view, it's not just Bitcoin, but Bitcoin is that unit of measure. It is that standard for effective accelerationism. It's like you're tying the currency of the world energy, you're channeling that into a universal system of value. And it's like volatile in the government currency terms right now. So people just get lost and think it's a bubble or hyper irrationality and it just gets dismissed. And you're like, no, this is like, if you climb the Kardashev scale in terms of channeling energy, but yet the currency that everybody on the planet's using is perpetually debasing against the energy. So it just leads to this forever chase in like the illusion of growth, which is only achieved by expanding the money supply even more so. And so I don't think like because you don't really hear the Bitcoin pitch from the accelerationist, AI kind of people, the people that are chasing this growth and recognize it and understand what's coming. You don't really like it. They're not. I don't think that that crowd is fully orange pilled. That and so I think that Bitcoin accelerationism is just what they've said and kind of the Bitcoin thesis, just not said in a different way, but presented differently. And I mean, that's going to happen this cycle too. So that's exciting. But like, it wasn't. I'm not some philosopher. It was kind of just borrowed ideas and along with piggybacking on the ideas of people before me. And so I gotta shout out Smeet because we had a bunch of phone calls talking about it. Got me pretty excited.
Hell yeah. Shout out Smeet. Shout out Theya. Go to theya.us, download it for free on the App Store. Huge, easy multi-sig self-custody. And Dylan, you are a modern day philosopher. You are an avid Twitter user, which is the modern day philosophy square, I suppose. And that makes a lot of sense. I mean, like the currency we're using now, obviously, as this unit of measurement, it's supposed to be our best effort of tying the real world into something that can solve for the lack of coincidence of wants. But because there's human intervention, it can never accurately do that. And having a currency that isn't our best efforts of replicating the world's energy, it is energy itself. Could be the way that we solve that and actually, move on this path of effective accelerationism. Henry Ford called for this too. You posted a tweet, I don't know how many days ago, about Henry Ford, 100 years in advance
Energy
calling
currency
for
to end all wars. Yeah. I mean, they've never figured out a way to, take kinetic force and turn it into purely a monetary good. It's just never been a thing. So we project our force in in forms of military action and, who wields the biggest stick onto what money is. And if it's fascinating, Joe, because if you go into history at all, not just the two decades and change of the 21st century, but the 20th century, the 19th century, all the way, for a couple of millennia, the story is similar. It's that, whoever wields the money wins, is control of society, not wins, but, rules everything. It's not about representative democracy. It's not about, it's who wields the money makes the rules, and at a micro and macro scale. And so the fight to control the money has been one that leads basically every time to assassination, basically coups, like look at look at South American history, look at African history, look at European history.
Here in the United States too.
It's very it's very, very clear the US, our president, was murdered, right? Like shot in the head, for challenging, among other things, the Federal Reserve System. Um, right. So it's and who knows why JFK was shot in the head? I don't know. Um, but this fight is clear, and we've never had a way to not, take over, coup the system with force and, overthrow. It's like, no, we're doing this peacefully. We're doing it peacefully. We're just allocating capital. If you don't like it, then I'm sorry, because I'm going to opt into this system. It's just information. It's just math, and that's powerful. It's powerful. We've never had a vehicle to achieve peaceful. It's not revolution by force. It's revolution opt in, peaceful, and it's just information. It's just energy. And so, it's the most powerful tool we have to protect ourselves, to protect our sovereignty, our family, our vitality, on this planet. And money is nothing but a means to an end. Money isn't all, far from it. Money is just the time that you spend on this planet that you can save in a liquid medium. And a lot of people don't know what money is these days, in a kind of a warped, late, not late stage capitalism, but late stage fiat world, where we can send nine figures, we can send billions of dollars to foreign nations, while our country dies. Our citizens are dying on the streets. There's nothing like this. Is a world where money is nothing more than a means of theft, slow time theft. That is, while the populace is divided and has zero idea what's going on. Like it's clear that we like post COVID. I think everybody that was like had a cognitive functioning could realize that we live in a world where at least 50% of people are on autopilot. It's just, there's no at least, right? So,
Oh yeah.
In the representative democracy world, it's like, well, you can't vote your way out of being stolen from forever. And
Because you're
no
perpetually at the
one,
behest of the lowest common denominator, like you just described, the autopilot people.
never mind that, but just in terms of the illusion of the red team or the blue team, you have a uniparty that is forever making you poorer. So if you're one of the people on the planet that is working and has a linear relationship between the time, your labor, and the money you make, you're being stolen from forever. And there's no actual exit to the system. There's no plan B. They actually don't have a contingency plan if this all blows up. And guess what? We're we're doused in gasoline, and we're out here in fire. Like we're combusting at the moment, right? Like this is blowing up. We're just in a slow motion fucking replay. Excuse my French. Of this just blowing up, and nobody can seem to figure it out, that we're in the end of it. Not to be a doomer, but like we're in the late stages of this exponential, and trillion means nothing actually these days, and it's not long before quadrillion will be in the lexicon. And not to say who knows what time frame, but it's coming, right? And so it's just a math thing for me, about this system. It's about protecting myself, and the fact that the world has something to it's a real strong tool in this world to be able to own the rights of your labor, to be able to take your time and save it in something that no one else can steal. We've never seen anything like Bitcoin, which is why I'm so passionate about it.
For sure. Peaceful revolution via opt-in to save human flourishing from the global central banking cabal that seeks to diminish it and enslave at every turn. Excellent
That sounds
stuff.
like a conspiracy theory.
Yeah.
I don't know. Yeah. That's interesting. Yeah.
Got to pare back my terminology to be able to orange pill the autopilot people.
Yeah. I I have hope for everybody, of course. And Bitcoin is a tool that aligns incentives for everyone eventually. So I think it's good, which is why I talk about it so much too. Is like I'm not doing this. I'm not talking about Bitcoin to pump my bags, bro, because this is $1 trillion asset, and I don't think I'm actually that important in this world. I know, but I do it because I think it's the truth. I think it's what's real. I think I believe every word I speak. So I talk about Bitcoin every day. Damn right I do, because I think this is, it's not a LARP. It's like, this is like the tool, guys, among other things, to maintain your sovereignty in a world where you're being encroached upon more than any time in human history. Like, that's reality, right? So it's just, like, ETFs are great. Bitcoin number go up is great. But ultimately, this is about maintaining your sovereignty as an individual, among other things, of course.
Excellent. Wise words, Dylan. One last thing, halving is like 9,000 and change blocks away. What do you have to say as parting words for people who might not be into Bitcoin yet? How can they insulate themselves? What do they do?
Uh, well, the halving is, of course, going to decrease the issuance rate of newly mined Bitcoin by 50%. The supply is not being cut in half. Bitcoin is still absolutely scarce with a cap supply of 21 million. But it's going to be an interesting run for some of these miners. Profitability metrics are going to be cranked. Fees are obviously going to become a larger relative share of miner revenue, but I think it's a natural. It's more of a demand story, in my opinion, because all of these new ETFs and everybody that's a new Bitcoin investor is kind of learning like the previous classes of Bitcoin investors, previous eras, where the halving was a real narrative, and it actually, whether it was spurious or not, or whether it was caused by the halving or not, has every time rallied significantly following the halving. So maybe it's a self-fulfilling prophecy at this point, and people, in an attempt to front run the halving, or front run what happens after the halving, acquire Bitcoin and say, hey, we're not going to sell until X or till ever, and we see that in the HODL metrics. So yeah, man, it's. I think everyone should own Bitcoin, and if the halving increases your conviction on said thing, great. Many people, including myself, have posted lots of Bitcoin. The halving affects quantified, or price models, or some relationship between supply halvings and price. Like, we can evaluate every one of those, and the cost, the casual relationship between those two. But I'm bullish, of course, on the halving. I might scoop up some of the miners after if they get damaged, as in the stock prices of them. But yeah, I'm excited for it. It's going to be a global party. I think every halving will become more of a kind of a global. It'll capture more global mindshare with every subsequent halving. It's like similar. I mean, right now it's actually lining up coincidentally with presidential cycles, but it is this global event that we all come to recognize as important in Bitcoin, not because it's any much changes. It's actually just kind of the next step in the function. It's nothing really changes about the core protocol, except a few lines of code, right? So that's the beauty of Bitcoin. So all of our software is on the same page, block 840,000. And if you don't like the rules, and fork off. And obviously, no value accrues to forks, as we've seen time and time and time again, relative to Bitcoin. So yeah, it's relative to central bank posturing, central bank job owning, and the fiscal situation spiraling out of control. No matter the party, we just have a system that's programmatic, And when you really strip it back and if you had to design a money from scratch, and what were its qualities built for the digital age, like hard pressed to come up with a better iteration than Bitcoin. And it wasn't the first iteration. Like this thing was failed to, to be built out, not correctly, but in a way that actually worked time and time and time again. Couldn't solve the double spend problem. Couldn't actually solve the problem of, absolute scarcity. Scarcity relative to what? To units, but to compute. How do you generate it, right? Satoshi combined, Adam's back hash cash, added a difficulty adjustment, and built on the work of some brilliant cryptographers, and released Bitcoin. It was the first thing that worked. So that's the thing that I think a lot of people also don't understand. It's like not the first thing. It's like the first thing that like figured it out, and now it's in everything else. Like obviously there's the altcoin complex, but they're competing for edge cases that aren't the best money ever. And I think even a lot of things they're competing for eventually accrue to Bitcoin or BTC, the asset. So that's another interesting like narrative violation, which is another rabbit hole. But the crypto and Bitcoin thesis have long been different, right? Bitcoin has been very much distinguished, but it's been sold to people as this boomer rock, and you can't do anything with it, and you can't quote unquote build on Bitcoin. And so you built the casino complex all with its own casino token in an attempt to kind of recreate the wheel and recreate money. And I understand the superiority of public blockchains, or the stuff you can do, or like a stable coin is so novel. Like I've used stable coins, right? It's better experience than sending a bank wire. I can promise you that the idea that Web3 or whatever kind of is a massive innovation over something such as Bitcoin, just the first iteration boomer tech, is like a flawed thesis in my view. It's like one that holds no conviction in anything other than words and theory instead of reality. That it's all competing as money, and it's a second syndrome. It's a second system syndrome rather, seeking a solution instead of a problem. It's a solution seeking a problem rather. Whereas Bitcoin, the product market fit is quite literally like the biggest thing in the world. We're chasing money. Like that's the biggest idea out there by definition. And so, I think that's just like a conflicting narrative too, is that a bunch of the crypto people are coming to Bitcoin again and realizing like, oh, the thing that has the value as a monetary unit is important, has the liquidity is important, and like the block space is extremely valuable, and is like actually, in my opinion, still undervalued. Like that's I don't you can fork Ethereum or Tron an infinite amount of times and create your own small little private blockchain, public pseudo quasi public blockchain ledger, and there's just going to be no liquidity or value or long-term staying power or accrual to the monetary token, right? You look at like any of the kind of the tokens, like the other ecosystem tokens like Ethereum or Solana, or the tokens on those ecosystems, right? And all of them trend down against the base asset like Ethereum or Solana, most of them, and all of those assets bleed out on a long-term value compared to Bitcoin. So it's just like it's very clear what's happening on a long-term time frame for me. On a short-term time frame, there's people that I very much respect, like I'm friends with, that chase like the next crypto pump for the token of the day every day, right? And that's just not like it. All the power to you, and if you do that and can do that successfully and have done that successfully in the past. But that's for the common man. Like that's just not a way to wealth accrual. It's just like provide value, build a business, and then save in a money that appreciates is more practical than like chasing, you know, the flavor of the day crypto pump for a token that actually is like useless on a long time frame. So like, that's my answer to the Bitcoin crypto thing is like, you know, because like there's going to be another round of silliness, if you will, with the crypto complex. And actually, a lot of it's going to be built on Bitcoin this time around, which is like, bullish for the price of said thing. It's bullish for the block size or the block space market for miners making fees, and there's going to be things that inflate the valuation, the valuation, liquidity, market value of the Bitcoin ecosystem this time that like also crash and spiral and contract on the way down. So is that good or bad, or is that just is? Uh, I that's the power of Bitcoin, is that I can't stop anyone else from using it. So it's going to happen, of course. But I think eventually, after all these subsequent boom and bust, eventually people just realize that Bitcoin is the thing. They want to acquire more of it. And so, how could you be bearish when everybody, after some time, comes to that conclusion, even if they kick and cry and scream on the way down before they come to that conclusion?
For sure. How could you be bearish? Indeed. Well said, Dylan. Thanks for coming on, man. Where do you want to send people?
You can just find me on Twitter at LeClair _ doing various things with the Bitcoin Mag team, UTXO, doing some stuff myself as well. So we're mixing it up, having a good time. Appreciate you having me on, man. It's been fun.
Phenomenal. Thanks, everybody, for watching. Of course, check out Theya at theya.us or search up Theya, Theya, on the App Store. Download it for free. It's multisig self-custody simplified. So if you've been on the fence whatsoever about taking your Bitcoin into your own hands, particularly into a very secure solution like multisig, look no further. Theya is a solution for you. Again, go to theya.us or search up Theya on the App Store. Take care, everyone.